Everything that we're talking about today, we're talking about when folks are raising private capital. When I say private capital, it means they are not going to, doing an IPO. They're not going to the New York Stock Exchange. They're not raising publicly from the public, right? So in the world of private capital markets, there's this concept called an accredited investor. An accredited investor, in the most basic terms, it's just a rich person. That's really all you need to know, right? It does get more technical than that. So the technical definition of an accredited investor is, someone who has an annual salary of $200,000 or more if they file their taxes singly, or $300,000 or more if they file jointly, or from a net worth perspective, they have more than $1 million in net worth, excluding their primary residence, right? So we're talking about, whatever might be counted as an asset or a liability on their mortgage. But for the intent and purposes of this podcast, all you really have to know is that they are a rich person, and that there are different ways to verify whether or not they're a rich person.
Now, I wanted to ask, do they have to have that income for a certain amount of years, or is it just like right now?
Yes, the past 2 calendar years. So if it's like the middle of 2019, well, 2019 doesn't count. It has to be 2018 and 2017, right? So it almost actually sounds like 2.5 years, but it's just the past 2 calendar years.
Okay.
Yeah.
Okay. So that's an accredited investor. And, do I have to, I was going to say, do I have to verify that? But I think we'll get into that in a minute.
Yes.
We'll get into that in a minute when we talk about some other stuff. But so non-accredited versus accredited. I mean, if they're non-accredited, that just means they didn't meet that standard. Is there any other type of investor that we need to know about? Sometimes they're called sophisticated, or,
Yes. So, we just talked about accredited investors. If we're talking about non-accredited investors, so people who don't meet those benchmark numbers set by the SEC, then they're considered a non-accredited investor, right? And so in the bucket of non-accredited investors, there is something that we call a sophisticated investor. And a sophisticated investor, all it really is someone that, tends to be a little bit more financially savvy. They understand what they're investing in and the risks of what they're investing in, right? So the sophisticated investor comes into play when we're talking about Rule 506B. And when we talk about the sophisticated investor, we say that you have to have a pre-existing relationship with them, right? So what a pre-existing relationship means is and there's different definitions and interpretations, right? The most classic, I would say, is that you already knew them, right? So it's not some random, email list that you bought off of someone that you've never talked to anyone on that list. It's not your email list where it's, half of them are random people that come to your website that you've never talked to, and the other half are people you actually have had some sort of conversation with. This really ends up being someone that maybe you've sat down and had coffee with. Maybe you had 2 phone conversations with them. Maybe in addition to those conversations, you had them take a survey about, what kind of investment opportunities they're interested in, how much they have to invest, things of that sort. There is a whole art towards making sure that someone is a pre-existing someone actually does have a pre-existing relationship with you. I have some syndicator clients who they'll use their website to bring in folks, but then everyone who signs up for a newsletter on that website, they will make them take a survey. They call them up twice. And once those 2 or 3 steps happen, then they count that person as having a pre-existing relationship with them, and they're the ones who get sent deals. Everyone else, they just get general newsletters. You don't touch them for the purposes of soliciting investments.